Right, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. Trust all of you had a great weekend, and let's get the new trading week underway. Right, before we start, let's take a quick look at the disclaimer. Right, take note that this is marketing communication and does not contain and should not be construed as containing investment advice or investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading Forex and CFDs as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, we'll take a quick look at the key economic events that are lined up for this week. We've got US inflation data as well as a central bank announcement, right? So we've got US PPI data on Tuesday, 13th of August, followed by the Reserve Bank of New Zealand's monetary policy statement announcement. That's on the 14th of August, Wednesday. And after that, we've got US CPI as well. Right, apologies, US CPI is also on the 14th. Just give me a second while I update that. Yep. Okay, there we go. Right, so of course, along with U.S. inflation data and the RBNZ's monetary policy statement, we've also got wage price index out of the Australia tomorrow. We've also got the labor force report from the UK, uh, and of course we have GDP data out of the UK on Thursday, 15th of August, and retail sales on Friday, 16th of August as well. So there's quite a few things going on this week, but I just wanted to point out uh, the inflation data out of the US and the RBNZ monetary policy statement as well. Now, looking at PPI, which is a producer price index. So the PPI measures the level of wholesale inflation in the US. And when we look at it on a monthly basis, we can see it has slowed down in the months of May and June, right? And after rising quite strongly, uh, in June, core PPI rose quite pretty strongly, rising 0.4% month over month. It is now expected to slow to show an increase of just 0.2% for the month of July, right? Whereas for the headline, PPI is expected to remain unchanged, rising 0.2% month over month in July. So we see the monthly change come in line with the forecast, with the respective forecast. Right? Remember, headline PPI is on the left, core PPI is on the right. These are both charts on a monthly basis. If both of these results come in line with their respective forecasts, right, we can also then expect markets to view this positively, and also we could potentially see a nice tapering in the PPI levels on an annualized basis. On the left hand side, I've got the chart for headline PPI, and on the right, I've got the chart for the core PPI. We can see uh, headline PPI continues to accelerate in 2024, rising as high as about 22.6% in June, whereas core PPI has risen to 3% in June. So they're both of them are showing upward trajectory on an annualized basis. So should we see softer monthly readings for the month of July, right? And we could potentially see uh, headline PPI and core PPI sort of stabilize or flatten out on an annualized basis. Now, this will most likely be viewed as positive by the markets, right? Because if inflationary pressures in the wholesale sector begin to flatten out, right, and dissipate, we can expect this to be bearish for the US dollar. So we could potentially expect the US dollar and the dollar index to come under some selling pressures tomorrow. Right, that's on Tuesday, 13th of August. Right, this data will be released at 12:30 p.m. GMT tomorrow. Okay, and then on Wednesday at 2 a.m., 14th of August, the RBNZ will release its monetary policy statement, where they're expected to maintain the official cash rate at 5.5% once again. Right, so should they do that on Wednesday, that would mark the 9th consecutive time that the RBNZ has held rates steady, and despite inflation falling to a 3-year low, right, it is still sits well above the RBNZ's target of 1 to 3%. So we may not see a rate cut take place on Wednesday. However, we could potentially see some dovish statements or some dovish remarks in the statements, as well as a pretty dovish press conference by Governor Adrian Orr. Part of that reason is because we can see, although inflation is well above, or not well above, is slightly above the target of 1 to 3%, we can see headline CPI has eased to 3.3% in the second quarter of this year, while the core CPI has fallen under 3%, hitting 2.8% in the second quarter of this year as well. Both of these are on annualized basis, so you can see inflationary pressures have dissipated quite strongly in New Zealand, and they're reaching closer to their target of 1 to 3%. Right, and when you look at GDP output, New Zealand actually fell into a technical recession in the second half of last year. There are two consecutive uh, quarters of negative growth, right, in the third and fourth quarter, and we saw a nice rebound, a pretty decent rebound, I should say, not nice rebound, pretty decent rebound or return to expansion in the first quarter of 2024. So with inflationary pressures subsiding quite steadily and economic output looking pretty poor, right? We could see a pretty dovish statement and a press conference by Governor Adrian Orr, right? So if you do see a very dovish outlook with regards to future monetary policy action, the Kiwi is likely to come under pressure on Wednesday. So take note of that. So they may not cut rate cuts on Wednesday. The markets are forecasting another hold, but we could see pretty dovish communication out of the RBNZ, especially with inflation inching closer to its target of 1 to 3%, while economic output looks pretty dire in New Zealand as well. All right, and finally, we have US CPI up on Wednesday. That's going to be released at 12:30 p.m., 14th of August. Now, we had a surprise down month for monthly CPI. So on the left, I have headline CPI, and on the right, I have core CPI. I think, if I remember correctly, headline CPI was expected to grow 0.1% in June, but in fact, it actually decreased by 0.1%. Right, and headline and core CPI rose just 0.1% on a monthly basis. Now, looking at the forecast for July, we can see core CPI rising to about 0.2%, which is over here, and headline CPI is expected to rise about 0.2% as well. So a slight increase on a monthly basis as well. Annualized CPI is expected to remain unchanged at 3%, right? So we can see after accelerating in the first quarter of 2024, headline CPI has stalled at about 3.5% in March and has started to moderate lower, dropping as low as 3% in June. Core CPI as well has moderated pretty low as well, hitting about 3.3% in June. So should we see another round of softer inflation data, right, especially with PPI and CPI, if both of these data points point to another month of further easing, this is quite likely going to cause the US dollar to come under significant selling pressures, right? So take note of that. All right, now let's dive into the charts on TradingView and begin the analysis. All right, hi Ren, good to see you as well. All right, yeah, for sure we can cover the Aussie and cable again. We'll definitely do that, but we'll start with the dollar index as usual, right? Let's start off with the dollar index and then work our way down through the major currency pairs. Then we'll take a look at the commodities, the indices, and any other requests that you may have as well. Right. So looking at the dollar index, it fell very sharply in the first week of August, right, hitting a low of 102.15, right? This was driven by the poor US labor market data that came out at the end of July, right? At the end of July and the first week of August, we had JOLTS job openings dwindle once again. We had ADP unemployment report as well as the BLS employment report showing slower rate of job creation, right? Non-farm payrolls had a pretty big miss. And at the same time, we saw the unemployment rate edge higher to 4.3%. So all of which contributing to a significant sell-off in the dollar index. But after hitting this low here on Monday, 5th of August, we have seen this index retrace a little bit higher. But when you look at it on the daily time frame, we can still see that it is trading, and it continues to trade underneath the bearish Ichimoku cloud, as well as trading underneath descending trend line as well. Right, let me make the cloud a little bit more visible. Just give me a second. Okay, this is fine. Okay, maybe just a touch more visible. Yeah, this is a bit more clearer. right? So we can see a dollar index continues to trade underneath the bearish Ichimoku cloud. The cloud indicates bearish momentum. It also continues to trade underneath a descending trend line, and you can see very clearly a series of lower highs and lower lows for the dollar index. Perhaps maybe there's even a bearish channel that we can identify. Let's see if we can draw a bearish channel. All right, now with Fridays, with Mondays move drop down here as low as 102.15, you can see it's broken out of this bearish channel here. But okay, so that's fine, but we still have the descending trend line and the bearish Ichimoku cloud to highlight the overhead resistance, right? So with regards to the dollar index, right, because we have PPI data and CPI data out today on Tuesday and Wednesday, and if both of these data sets point to another round of softer than expected inflation data, we can definitely expect the dollar index to come under selling pressures. So that's why we have identified a pivot level at 102.66. This is an overlap support level here, and we are expecting dollar index to slide down towards the pivot should we see inflationary pressures in the US dissipate further, as would be evident in the PPI and CPI data out on Tuesday and Wednesday. Now, this pivot level is a pretty significant level here. It previously functioned as a pullback resistance at the beginning of January, functioned as a swing low support in the middle of March, and roughly functioned as a pretty decent support once again on last Monday. So this creates a very significant overlap level or overlap support level, which we have identified as the pivot at 102.66, and we're expecting dollar index to slide lower towards this level, especially if PPI and CPI data come in soft once more. Now looking a little bit further below, there's another nice pullback support level that at 102.15. First of all, we saw price finding nice support here in the first week of January, and of course we can see the bottom of this wick here hitting this pullback level down to a T before reversing to retrace higher. And this level here also has the presence of a 78.6% Fibonacci retracement, and this retracement level sits at about 101.88, right? So about 10 pips just below, about 25 pips just below here. So we've got a pretty strong support buffer or support zone for the dollar index at around a 78.6% Fibonacci retracement. Now, in terms of resistance, there's a nice pullback resistance here at 103.65. So previously, this level functioned as a pretty decent pullback support here on Friday, 18 and 19 of July. 17 and 18 of July previously functioned as a pretty decent pullback support. And of course, with price breaking through this level, what was previously a pullback support could now potentially function as a pullback resistance. So that's why we've identified 103.65 as the first resistance. And this level also has the presence of a 50% Fibonacci retracement. This retracement was found by running from here, the top here, this high on the 30th of July, ending with the low on 5th of August. We can see that 50% retracement aligns pretty well with this pullback resistance here. So we've got a nice resistance buffer, resistance zone that's identified by the descending trend line, the pullback resistance at 103.65, and also the 50% Fibonacci retracement. All right, so these are the key levels for the dollar index for today on the daily time frame. Right, and now let's move on over to cable and Aussie, and of course we'll cover the Kiwi as well since we've got the RB and Z up on Wednesday. Right, so let's move on over to cable. Despite dollar index being in a strong downtrend, we can see that demand for the pound was actually even more less in demand, right? Typically, when you see the dollar index selling off quite sharply like this, right, we can expect cable to actually be rising. But we only saw the euro rising over this period. We actually saw cable continue to drop lower, signifying much weaker demand for the pound. Right. However, this currency pair managed to find support on last Wednesday, right? It stabilized at around 1.2684 to make a nice retracement. Now, when the Ichimoku cloud is green as well, it can function as a support zone itself, and the cloud itself can function as a potential support zone. So this is what we saw last Wednesday and Thursday. Cable finding support within the bullish Ichimoku cloud, and at the same time, when we look at the stochastic and RSI indicators on the daily time frame, we can see both of them highlighting potential oversold conditions as well. So when these two indicators drop to their lower bounds, right? RSI drop as low as 37.92, stochastic dropping under 10, right? In a scenario like this, these two indicators are typically highlighting a potential oversold condition, and that means we can expect and this particular instrument, in this case cable, to stabilize or find a near-term floor and potentially make a bullish reversal. So this is what has played out towards the end of last week. So last Thursday and Friday, we saw a nice bounce in the cable as it found support within the bullish Ichimoku cloud. And also, of course, at the same time, the RSI and stochastic oscillator indicating a potential oversold condition, all of which identified as helped us to identify a potential bullish bounce as well. Now, with this bullish bounce having taken place, and also I see cable trying to break out of this descending trend line as well. If we zoom in here, and you can see there's this descending trend line. Oops. Right, as we have a nice descending trend line that's been in place since mid-July, and we saw potential bullish breakout probably take place today. Right, it's attempting to break out of this descending trend line, but for now it looks to have failed. Right, take note, it looks to have failed. However, there's still a strong support zone for cable at around 1.2700. So if it does find support around here, perhaps we get a second bite at the cherry to go long on cable as well. Right, so take note, this is a pretty strong support zone over here as identified by the cloud, and the pullback support at 1.2681. Right, it was attempting to make a bullish breakout earlier this morning. However, cable looks to be retreating as we speak, and it could potentially once again find support within the bullish Ichimoku cloud. All right, so we're expecting cable to make a bullish breakout through the descending trend line and make a run towards the pivot here. The pivot here is a combination of two swing high resistance. The first one of which took place on the 11th of March, second swing high resistance taking place on 12th of June, and another sort of pullback support level here taking place on the 29th of July. So this creates a very significant overlap level at 1.2856. So this level is now pretty strong resistance, is a pretty strong overlap resistance, which has been identified as the pivot. Right, so if we do get another strong bounce on cable, right, we can target the pivot as a potential take profit zone. So that's the purpose of identifying this pivot level as an overlap resistance, because it can be used to identify a potential take profit zone should we see cable make this bullish breakout through this descending trend line. Now, not only is it an overlap resistance, we also have a Fibonacci retracement here. This retracement starts from this swing high on the 17th of July down to this low of last Thursday, 8th of August. We can see that the 50% retracement level aligns very well with the overlap resistance, which is the pivot. Right, and of course the first and the next resistance above the pivot is this swing high that took place on the 17th of July, which is 1.3008. Right now, and of course another retracement is another pretty decent retracement that we can use, starting from this swing low here on 22nd of April, going up to the swing high on the 17th. We can see there's a 50% retracement level that aligns pretty well with the first support as well. All right, so these are the key levels for cable for today, right, based on the daily time frame, and especially if it manages to stay above find support within the bullish Ichimoku cloud, it gives us probably another opportunity to go long on the cable and looking for another potential bullish breakout through the descending trend line, after which we can then target a potential take profit zone close to the pivot at 1.2856. All right, now let's take a look at the Aussie. Right, similar to the Aussie as well, it has sold off very sharply since mid-July, right, reversing from about 68 cents, dropping as low as 63.50. However, last Monday, right, it bounced off this level very strongly and has retraced higher, and even today as well, it looks to be climbing pretty strong as well. Now, so if you've gone long on the Aussie, we can identify a potential take profit zone close to the pivot here. Right, this pivot level has been identified as a pullback resistance. This is at 66.35. Previously, this level functioned as a pretty decent pullback support from 21st of June to the 2nd of July. And of course, with price breaking through this level, what was previously a pullback support could now potentially function as resistance. And we also have the presence of a Fibonacci retracement. And in this case, it is a 61.8% Fibonacci retracement. We started this retracement here from the high on the 11th of July, going down to the swing low here on the 5th of August. We can see that the 61.8% retracement level aligns pretty well with the pullback resistance, which is the pivot. So should you have any long Aussie positions today or from last week, right? Take note, identifying your take profit zone at around this resistance level where the 61.8% Fibonacci retracement sits is a pretty it's a suitable level to identify your take profit zone, right? And of course, with regards to support, we can see a pretty, of course, this wick dropping as low as 63.50, but generally you can see that this level at 64.88 is a pretty decent pullback support level, which can be used to identify as the first support. Right, so these are the key levels for the Aussie. Okay, now let's take a look at the Kiwi. Right, remember, take note, we've got the RBNZ coming up on Wednesday, right, and with the Kiwi rising very strongly as well. But I think it's going to continue to rise for the next couple of days. However, if we do see a dovish outlook by the RBNZ come Wednesday, this could potentially cause the Kiwi to stall and reverse to drop lower. Right, we could see the Kiwi face some strong selling pressures on Wednesday should we see a statement and a press conference that's communicating a pretty dovish outlook on future monetary policy action. Right, now the Kiwi is approaching the pivot level here. The pivot is at 60.42. This has been identified as a pullback resistance level that has the presence of a 61.8% Fibonacci retracement. Right, this pullback level here previously functioned as a support. Right, this was a pretty decent support level from 16th of July till the 18th of July, after which price broke through it. So what was previously a pullback support could now potentially be resistance, and at the same time it has the presence of a 61.8% Fibonacci retracement as well. Right, so this retracement level was found starting from here, this high on the 8th of July, going down to the low here on the 5th of August. Right, so Kiwi is rising up towards this pivot level here, so you can potentially identify your first take profit zone at around the pivot or at around the 61.8% Fibonacci retracement. Remember, the RBNZ interest rate decision only takes place on Wednesday, so we could see the Kiwi continue to rise further over the next couple of days. However, come Wednesday, we could potentially see this currency pair stall and reverse to drop lower. Right, so your first take profit level for the long Kiwi trade, especially if you've been long Kiwi since last week or maybe even since early this morning, right? You can identify your first take profit level at around the pivot point of 60.42, and you can identify a second take profit level at around the 78.6%, which is also another pretty decent pullback resistance level here. And you can see another pullback resistance taking place on 17th of July. So take note, if the Kiwi does continue to rise further up today and tomorrow, your first take profit level can be identified at the pivot, which has the presence of a 61.8% Fibonacci retracement. And of course, should price continue to rise higher tomorrow, we can then potentially target the 78.6% Fibonacci retracement as the next potential take profit zone. Now, take note, come Wednesday, we could see Kiwi stall and reverse, right? Especially if we do see a pretty dovish outlook and communication by the RBNZ. All right, so these are the key levels for the Kiwi for today. All right, okay, now let's move on over to the commodities, right? Let's take a look at the commodities. We'll start with gold, right? XAU USD is the ticker symbol for spot gold prices, and if you look at it, gold has actually been ranging approximately between this lower bound at $2,360 per ounce and the upper bound at around $2,468 per ounce, right? So take note, this level here at $2,481 per ounce is the all-time high, is the intraday all-time high for gold prices that was set on 17th of July. So we can see very clearly since 9th of July, Till now, gold prices have ranged approximately between these two levels, the lower bound at 2,360, which has been identified as the first support, and the upper bound at 2,468, which has been identified as the pivot for today. So what this means is, since we know that this precious metal has bounced off this upper and lower bound several times, it's clearly indicating sideways trading action, and we can use this upper and lower bounds as potential entries and exit points as well. So in this case, with gold prices rising quite strongly since Thursday, and if you've been long gold, right, you can identify a potential take profit zone. Give me a second. Right, just making this a bit more clearer, right? So you can identify a potential take profit zone at around the pivot, right? So as gold prices continue to climb higher today, right, identifying a potential take profit zone at around $2,468 per ounce is a suitable area to do so, right? Remember, take note from here onwards, I would actually highlight this over here. There's a pretty decent resistance zone that begins from 2,450 up to 2,470, right? There's a pretty strong resistance zone. So should we see gold prices reach up into this zone once more, it's a pretty good area to identify a potential take profit level for your long gold trades. Now, with gold making an all-time high, intraday all-time high here on the 17th of July at 2,481, how can we identify the next resistance level? Right, in this scenario, we have to rely on a Fibonacci extension, right? Because take note, we have no other swing high resistance or overlap or pullback resistance levels that we can reference. In scenarios such as this, when price is trading close to an all-time high, we have to rely on Fibonacci tools, and in this particular case, we are relying on a Fibonacci extension. So to find this extension level, we start the retracement from here, this high on the 2nd of August, going down to this low here on the 5th of August. We can see that the 161.8% extension level sits at 2,547 and 78 cents. So this is where the first resistance above the pivot has been identified. Right, and of course, the first support is an overlap support level at 2,360. Right, we see it run into resistance here previously on 21st of June, after which it consolidated and found support here on the 8th of July, and finding support once again on the 26th. And even here, you can argue on the 5th of August, it found support off this level once more. So this creates a significant overlap support level that also has the presence of a 61.8% Fibonacci retracement. Right, so this retracement was found starting from here, this low here on 26th of June, and ending with the high on the 17th of July. We can see the 61.8% retracement level aligned pretty well with the first support. Right. Okay, so for now, we are expecting gold prices to continue to climb higher, and should it reach close to the pivot, right, or close to around 2,450 and above, right, this would be a good area to identify as a potential take profit zone for any long gold trades that you may have. Right, now let's switch on over to XTI USD, right? So this is the instrument that tracks the WTI crude oil futures. Now we've seen crude prices reverse of $85 per barrel at the beginning of July, and reverse quite sharply, dropping as low as $72.43 per barrel here. So they dropped as low as $72.43 last Monday, and however, it has bounced off a strong swing low support to make a very nice rebound, right? So this level here is a strong swing low support, which first took place on the 4th of June. Nice swing low taking place here, 4th of June, and this is the same zone where WTI oil found support on Monday, 5th of August. It consolidated around this zone, around this level for a period of 2.5 days before rebounding strongly on Wednesday. Right, not only was this a strong pullback support level, right, when you look at the stochastic oscillator and RSI on a daily time frame, we also saw these momentum indicators highlight a potential oversold condition, right? We saw them with RSI dropping as low as 32.74 on Tuesday, 6th of August, and stochastic dropping under 20, right, we saw both these indicators line up to identify a potential oversold condition, which tells us that WXTI USD is likely to find a floor and stage a minor rebound. But in this case, this has been a very strong bullish bounce. So we had the combination of a nice swing low support that was formed on 4th of June, and together with the RSI and stochastic oscillators oscillator indicators indicating or highlighting a potential oversold conditions, telling us that crude prices are likely to stabilize, find a floor before staging a rebound. And this has been actually quite a strong bounce as we see it break through the bearish channel as well, right? It made a nice bullish breakout last Friday, and the bullish momentum has continued today as well, right? So take note, this was a nice bearish channel that's been in place since 18th of July, and we've seen a nice breakout take place last Friday, and the bullish momentum has continued today. So we can expect crude prices to continue to rise higher, and where you can identify a potential take profit zone is around this pivot level here at $79.65 per barrel. You can see this level here function as a pullback resistance on 26th of July, and then once again on the 1st of August. And this level here also has the presence of a 61.8% Fibonacci retracement, right? So we can see here this retracement level was found starting from here, this swing high on the 5th of July, going down to the swing low here on the 5th of August. We can see the 61.8% retracement level aligns pretty well with the pullback resistance at 79.65, which is the pivot level. So this is a strong resistance zone here, and you can identify a suitable take profit level close to the pivot should we see crude prices continue to climb higher. Right. First support very clearly is this multi-swing low support at $73.14, and the next resistance uh, above the pivot sits at this pullback resistance at $83.28. Right. There's also maybe I believe we can highlight an intermediate resistance between the pivot and the first resistance as well, and we can do that by using the 78.6% retracement. Right. There's a pretty decent pullback resistance level at around $82, which is where the 78.6% Fibonacci retracement sits. So if we do see crude prices continue to climb higher, right, the first take profit level can be identified at around the pivot, close to the 61.8% Fibonacci retracement. And should we see prices continue to climb higher, we can then target the next potential take profit zone that's close to the 78.6% Fibonacci retracement, which is another pullback resistance level. Right, so these are the key levels for XTI USD. And yeah, and also take note, as of now on a daily time frame, RSI and stochastic are sort of mid-range. RSI is around 49, stochastic oscillator is around 44 as well. Both are in mid-range, so they are neither indicating overbought or oversold conditions just yet. But take note, should we see XTI USD rise higher, and if we see both these momentum indicators highlight a potential overbought condition, that's where we can that's where we're likely to see crude prices stall as well, right? It's something similar to what we saw here on the 4th of July, right? We saw RSI hitting as high as 66.50, stochastic hitting about 92, and we finally saw crude prices stall around $85 per barrel or 84, yeah, 80, and reverse to drop lower. So we're not there just yet. We still got some way to go. So yeah, so take note, should we see crude prices continue to rise strongly, and if we do see the RSI and stochastic oscillator highlight a potential overbought condition on the daily time frame, that's where we can potentially expect this commodity to stall once more. All right, so that's what we have for crude oil. Let's take a look at the indices, right? Let's start with the DAX. DE40 is the instrument that tracks the DAX futures. Now looking at the DAX on the daily time frame and looking at the stochastic and RSI as well, right? This is pretty important because we see that on Tuesday, 6th of August, RSI dropping as low as 28.77, stochastic hitting dropping under 20, both of which are indicating or highlighting a potential oversold condition. And this is when we actually did see the DAX stabilize on Tuesday and Wednesday, 6th and 7th of August. It stabilized at around 17,300 and staged a pretty strong rebound on Thursday, right? And this support level here was also identified by 38.2% retracement, right? This retracement level was found by starting from here, this low on the 27th of October 2023, going up to the all-time high for the DAX. Take note, this is the intraday all-time high for the DAX on the 16th of May at 18,933. and we have a 38.2% retracement level, which function as a pretty decent support zone for the DEX. Let me see if there's a, no, there's no Ichimoku cloud. So we had the combination of this 38.2% retracement level, which can potentially function as support. And also we saw the RSI and stochastic oscillator, both of these momentum indicators highlighting a potential oversold condition, which means we can expect the DEX to sort of stabilize, find the floor, and stage a rebound, which is what happened last Thursday. Especially last Thursday was a very strong bounce for the DEX. Today it looks to be pulling back slightly, but I think perhaps equity markets could still make to still grind higher, right? But however, I think where it's going to run into resistance, strong resistance for the DAX at least, is at this pullback level here. This is the pullback resistance at 18,166, which has been identified as the pivot. This pivot also has the presence of a 61.8% Fibonacci retracement, right? This retracement level is found by starting from here, this resistance on the 12th of July, ending with the low on 5th of August. We can see the 61% retracement level aligned pretty well with the pullback resistance here. So take note, should we see DEX sort of consolidate at around current levels, right? And it could continue to drift higher, but I think it's going to really stall and run into resistance at around the pivot here. So should you have any long DEX positions, right? Should you have any positions, long positions for the DEX, identifying your take profit level at around the pivot here would be a suitable area to do so. Probably even from here, right? From as low as 17,988 to about 18,150, right? Is a pretty decent zone to identify your take profit level for the DEX. And of course, in terms of the next resistance above the pivot is this pullback level here at 18,873, which is close to the all-time high that was formed on the 16th of May. Right, now let's take a look at US 500. Right, so in this case, when you look at the Ichimoku cloud, previously in mid-April, the Ichimoku cloud itself, remember the cloud is green, it is a bullish Ichimoku cloud, and a bullish Ichimoku cloud itself can typically function as an area of support, which is what happened on 19th of April. However, this time round, the cloud did not function as a potential support zone. However, when you look at the stochastic and RSI indicators, they once again indicated oversold conditions similar to the setup that we saw on 19th of April. Right, when we look at these two indicators on the 19th of April, we see RSI dropping as low as 31 and stochastic dropping, let's see, dropping under 12, right, dropping under 10, and we saw the US 500 stabilize at around 4,980, right? So these two indicators, when they line up together, they do really indicate potential oversold conditions. So that means we can expect the US 500 to sort of stabilize, find a floor, and stage a rebound. So in this case, it really led to another strong bull run for the US 500. Now we see something similar occur very recently as well, last Monday or Tuesday, I believe. Last Wednesday, sorry, 7th of August, we saw the RSI drop to hit 30.46 and stochastic oscillator dropping under 20, both of which are highlighting a potential oversold conditions. And this is where we did see US 500 stabilize at around 5,170, and it bounced very strongly on Thursday. It continued on Friday, and today so far it's open in the green as well and looks to be edging higher, right? So we could see US 500 continue to grind higher. However, I see a strong resistance zone at around the pivot, right? So I see what was previously a pullback support level at 5,400, right? This was a pullback support level that was in place since 25th of July till the 1st of August, and this level has now been broken. So what was previously a pullback support level could now potentially be resistance. And at the same time, we have this descending trend line in place, as well as having a 50% Fibonacci retracement. This retracement was found by going from the all-time high. This is the intraday all-time high for US 500 on 16th of July, going down to the low on Monday, 5th of August. We can see that the 50% retracement level aligns pretty well with the pivot, which is a pullback resistance. So I think we can expect US 500 to stall around here and maybe resume the downtrend. right? But of course, if we do see a clean break above this descending trend line, right? If we do see a clean break above this descending trend line, then of course we could see it rise up towards the first resistance, which is at 5,573, which is a potential, which is a pullback resistance level that has the presence of a 78.6% retracement, right? So just to summarize, if you have a long position on the US 500, identifying your take profit zone at around the pivot, which is close to the 50% retracement, is a suitable area to do so. And but take note, I think we can expect US 500 to potentially stall around this region here at around 5,420, right? As we see a nice pullback resistance, the descending trend line, as well as the 50% Fibonacci retracement. Right. Okay. So this is for US 500. Let's move on over to um. Let's see what have we not covered. Right. If not, before I move on to the next instrument, is there any requests? Yeah. Do you have any requests for any other instruments? Please do let me know. Yeah. Drop it in the chat box, and I'll be more than happy to go through the analysis with you. Right. In the meantime, right before we resume, I'm just going to launch a poll as well. Truly appreciate it if you can give your feedback with regards to today's webinar. Right, truly appreciate it if you guys could give your feedback with regards to today's session, and we'll continue our analysis with. Let's see, we've covered most of it. Okay, we can look at Bitcoin as well. Right, we can see here on the daily time frame, right, Bitcoin staged a pretty strong bounce on Thursday as well, but it's run into resistance at around the 61.8% Fibonacci retracement here. So this 61.8% retracement was found by running from starting from here, 29th of July, from this high going down to the low here on the 5th of August. We can see that the 61.8% retracement level aligns just underneath this overlap resistance here. There's an overlap resistance level at 63,789, which has been identified as the first resistance. So as Bitcoin was rising strongly on Thursday, this is where it ran into resistance and looks to be pulling back. And I think this pullback could extend even further, and it may potentially find support at this multi-swing low level, or this pullback support level here at 53,974. So this level here, the pullback support level, has been identified as the pivot, which also has the presence of a 61.8% retracement. So this retracement was found from here, this low 5th of August, going up to the high here on the 8th. We can see the 61.8% retracement aligned pretty well with the pivot. And when we zoom out, there's also another 61.8% retracement sitting slightly below it. So we have a pretty decent support zone here for Bitcoin. And this is where the pivot sits. The pivot sits just above a pretty strong support zone. So I think we can expect Bitcoin to continue to drop lower. So should you have any short Bitcoin positions, like right over, especially over the weekend, and if you have shorted Bitcoin over the weekend and it's continued to slide lower, we can identify a potential take profit zone between 55,200 and 54,000, right? There's a pretty decent support zone here, and you can use this support zone to identify your take profit for any short Bitcoin trade that you may have, right? So I think we can expect Bitcoin to continue to slide lower and potentially stabilize around the pivot here, right? Looking at stochastic and RSI, right? They have yet to indicate any oversold condition just yet, right? The last oversold condition was highlighted on 5th of August, Monday, right? We see RSI dropping as low as 26, stochastic dropping under 20 or dropping under 15 as well. And we did see Bitcoin stabilize on Tuesday, 6th of August, right? It's consolidated on Tuesday and Wednesday before bouncing strongly on Thursday as well, right? Similar, this setup here by the stochastic and RSI is something similar to what we saw here as well on 5th of July and as well as on the 24th of July. So you can see when these two indicators highlight a potential oversold conditions, right? the instrument that we're trading or analyzing, right, usually will find a near-term support, right? And this does really help us to find a near-term support, and we can expect a potential retracement to the upside, which is what happened on 24th of June. And on 7th of July, 8th of July, we saw a much stronger move that took place as well. This is a very strong bullish reversal that took place in the second week of July, right? For the latest one here that occurred last week, we saw a very strong bounce on Thursday. However, prices failed to follow through, right? There's no continuation. The bullish momentum has faded, and we see Bitcoin starting to pull back. So it's quite likely going to find support at around the pivot here at 53,974. All right, thanks everyone for those who have given your feedback with regards to today's webinar. I truly appreciate it. All right, now let's resume the analysis. Let's see what we've got. What else can we cover? We've covered DEX, cable. All right, let's cover dollar yen. Right, let's cover dollar yen as well. Right, similarly to the other instruments as well. Right, we saw dollar yen stabilize shortly after we saw the RSI and stochastic oscillator highlight potential oversold condition, right? This took place on Monday, 5th of August, RSI dropping as low as 13.26, stochastic dropping under 8. We did see dollar yen stabilize at around 144 on Tuesday before bouncing quite strongly on Wednesday, 7th of August. And even today as well, it's opened the green and looks to be edging higher, right? And I think this retracement to the upside could continue, and where I think dollar yen could potentially stall or run into major resistance barrier is around the 38.2% Fibonacci retracement. So it's a pretty strong resistance area that begins from about 149.40 to the pivot, which is at 150.79. The pivot is actually an overlap resistance level that has the presence of a 38.2% retracement underneath it. So I think we can expect dollar yen to retrace higher, right? And where it could stall is at this zone that's identified between the pivot and the 38.2% Fibonacci retracement. And of course, we see the Ichimoku cloud in red, which continues to highlight the bearish momentum. And I think the bearish, there's a pretty decent bearish trend line as well, or descending trend line, right? We still have a pretty decent descending trend line in play, right? So price continues to trade underneath the descending trend line, underneath the bearish Ichimoku cloud, and of course we are seeing a combination of a series of lower highs and lower lows. So I think this retracement to the upside could continue. However, where it can run into resistance is this area that's bounded by the descending trend line, the 38.2% Fibonacci retracement, as well as the pivot point, which is an overlap resistance at 150.79. And looking at it on the 4-hour time frame, right? Yeah, you can see price has entered into the bearish Ichimoku cloud as well, but I think it still may have some room to run. So if you have been long dollar yen since last week, right, perhaps identifying a potential take profit zone that's bounded by the descending trend line, and the 38.2% Fibonacci retracement would be a suitable area to do so as well. All right, okay, that's dollar yen. Let's see what else can we do. We can take a look at dollar franc as well. Or let's take a look at the euro. I don't think we touched the euro, right? Let's take a look at that. Right, we'll end the session by looking at euro. So with dollar index losing steam, right, it looks to be losing steam, and especially if PPI and CPI data come in soft once more, we can expect the dollar index to slide lower down towards the pivot, and that of course means we can expect the euro to climb higher. Now, the major resistance for the euro has been identified at 1.0998. This is the pivot level here. This is a combination of pullback resistance that took place in the second week of Jan, a swing high resistance that took place on the 8th of March, and of course this pullback resistance here that took place on the 5th of August. So very clearly this is a pretty strong resistance level here, which has been identified as the pivot. So this means that if should you have any long euro positions, right? Especially after it bounced off this overlap support here at on last Thursday. We see the euro sort of bounce off this level, stabilize, and is rising uh, up today as well. We can identify a potential take profit zone close to the pivot here, right? So probably anywhere between 1.0970 and above would be a suitable area to identify any potential take profit zone for the long euro trades, right? We see it uh, probably edging higher today, and at the same time we can see the cloud has also transitioned from red to green, indicating the bullish momentum, right? So we can probably expect the euro to climb higher, especially of course if we see softer inflation data out of the US this week, right? So if you do see the euro climbing higher, identifying a potential take profit zone at around 1.0970 and above is a suitable area to do so, right? The next resistance level above the pivot is this swing high that took place on 28th of December last year, right? So this has been identified. This swing high resistance has been identified as the first resistance, which is at 1.1106. And support has been identified here. This was previously a pullback support level here that was in place from 15th of July till 19th of July. And then with this bounce here that occurred on 8th of August, this creates an overlap level here. So the first support at 1.0883 is an overlap support that has the presence of a 61.8% Fibonacci retracement underneath it. So this retracement level was found from here, starting from this low on the 1st of August, going up to the high on the 5th of August. 61.8% retracement sits at 1.0865. All right, okay, and let's see, let's cover look at dollar franc as well, right? Similar to dollar yen, you can see they're sharing a pretty similar market structure, right? They've fallen very sharply off their respective highs, but they found support and stabilize at around the same dates, right? At around the same dates. 6th of August is where both these currency pairs sort of stabilized. And similarly, of course, if we look at the stochastic and RSI indicators, right, we see both these indicators highlight a potential oversold condition on Tuesday, 6th of August, and this is where dollar franc did stabilize at around 85 and rebound to climb higher. So dollar franc continues to rise today as well, and if you have any long positions on dollar franc, we can identify a potential take profit zone at around the pivot. The pivot is a pullback resistance. This was previously a pullback support level here that took place in mid-March. Now it's going to function as a potential resistance, and it also has the presence of a 50% Fibonacci retracement, right? 50% Fibonacci retracement. This retracement was found from here, starting from this high on the 3rd of July and ending with the low on 5th of August. 50% retracement is here. And at the same time, I see a pretty decent descending trend line as well. There's a pretty decent descending trend line over here. So we have an area that's bounded by a descending trend line, the pivot, which is the pullback resistance, and a 50% Fibonacci retracement, right? So we have a pretty strong resistance zone identified by these three indicators here. So identifying your take profit zone for long dollar franc and around the pivot is a suitable area to do so. All right, so that's dollar franc. And of course, the next resistance above the pivot is this pullback level here at 89.30. This is a pullback resistance that took place on the 23rd of July, which also has the presence of a 78.6% Fibonacci retracement. And of course, first support is very clear. It's the pullback support that was formed last Tuesday and Wednesday at 85, right? At 85 cents exactly. Okay. It's 85 francs, sorry, not cents. Yeah, it's 85 francs here. Okay, 0.85. Right, okay, let's see anything else. Right, if not, then we've come towards the end of today's session. All right, thanks everyone for tuning in to today's webinar brought to you by IC Markets. And also, thank you very much for the feedback. Truly appreciate it. And of course, do look out for all upcoming webinars by IC Markets for the rest of this week. We've got a combination of educational and live analysis topics as well. And just take note of the economic calendar for this week. Right, there's quite a few things going on. Right, we've got wage price index out of Australia tomorrow, along with the labor force report by the UK. We've also got PPI data For the US, that's out at 12:30 p.m. GMT on Tuesday, 13th of August. And on Wednesday, we've got the RBNZ dropping its monetary policy statement, followed by the press conference by Governor Adrian Orr, both of which are going to take place at 2 a.m. and 3 a.m. GMT, respectively. The RBNZ is expected to keep rates on hold once more at 5.5%. However, we should not discount a potential dovish communication or dovish outlook by the central bank uh, in their statement as well as during the press conference, right? That could potentially cause the Kiwi to come under pretty strong selling pressures, and we may see this recent rise in the Kiwi stall and potentially pull back following this interest rate announcement. Then after that, of course, we've got uh, CPI data out of the UK as well. That's at 6 a.m. GMT on Wednesday, 14th of August, followed by CPI data out of the States. That's at 12:30 p.m. GMT, Wednesday, 14th August. And of course, we've got retail sales out of the US, GDP data out of the UK on Thursday, and finally, we have retail sales on Friday as well. All right, so it's quite a busy calendar, but take note, look, do keep an eye out for the inflation data out of the US, and of course, the RBNZ interest rate decision as well. All right, that's all I've got for today. Right, thanks everyone for tuning in. Hope this has been a great session for all of you. Do look out for all upcoming webinars brought to you by IC Markets for the rest of this week. Right, take care, have a great trading week, and I'll catch you all at the next webinar.